Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in, take a look, and see what's going on today. If you want to follow me, it's at Fair Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, looking for potential investment opportunities, sharing them with everyone in the community. We do have a special coupon code going on. Special is that coupon code. And I just released a midweek update on the companies that I am watching and their setups. If you're interested, you can use a special coupon code, sign up. You get a 50% monthly, the first month on a monthly discount, 50% off. And you get a larger discount on the yearly membership if you like to open up a yearly member or swap from a monthly to a yearly membership. You can also get that discount. So the Coastal Journal, breaking Fed, not QE. The Fed bought 14.8 billion worth of 10-year bonds today. This is on top of the 20 billion it bought yesterday. That's about 35 billion in 2 days of 10-year bond buying, which is not QE. So the Fed is in there, just like I guessed. I don't know if you heard some of my daily updates a while back. The Fed said that they don't want the yields to go above 4.5%. And then this comes out saying that the Fed is purchasing 10-year bonds. um, it was a guess that I had, and it looks like it was a lucky guess. So they are in there actively buying bonds to hold down interest rates, doing quantitative easing, which is not quantitative easing, right? Eric Nettle says, we believe OPEC spare capacity is overstated and that there's much less oil to be normalized than consensus believes. Valid near-term demand uncertainties for now, but twilight of U.S. shale plus OPEC capacity normalization equals the next bull market for oil in 2026 and beyond, in his opinion. So this is OPEC plus oil exports. You can see there's a 2 million barrel per day delta between the year 2023 and today. So perhaps there's about 2 million barrels of spare capacity in the system. And if you go even earlier than that, there is a lot less because you can see spare capacity was between a million, almost about a million barrels or less in some of these other areas. So my guess was about 1.5 to 2 million barrels per day spare capacity is probably what's in the system, and it's all held in Saudi Arabia. The bulk of that spare capacity is all Saudi Arabia. Digger says Platinum has been closing in on this yellow box he's got in the corner there, between $900 and $1,000 for 8 quarters now, but the pressure to break is increasing. Meanwhile, the platinum market has been in deficit since 2023. In 2024, this deficit reached 1 million ounces, while total annual global production is only 7.1 million ounces. According to the World Platinum Council, shortages in the platinum market will continue until at least 2028. And here it is, squeezing on up, ready to get a big breakout in platinum. I'm playing this thing pretty hard. There's no denying that. And we're right there ready to break. It's looking fantastic. Lynn Alden says, tens of billions of dollars of medical product import tariff front running is a crazy chart. Look at the U.S. imports of medicinal, dental, and pharmaceutical products going vertical. So that's U.S. imports of that and U.S. imports of goods from Ireland ripping higher. We could see a slowdown behind this because if they're ordering everything today, that means that maybe they're not going to order stuff within the next 6 months. Market mayhem. U.S. Treasury Secretary Bessent. We're currently negotiating with 17 to 18 key trade partners. We have not engaged with China as of yet. Remember when we were told that they were talking with China daily? Yeah, that was adorable. You know, that also brings into question, are they really negotiating with these 17 to 18 key trade partners? Why would they lie about this? Once you find out that you're being lied to, everything comes into question after that. So it's I'll just say it's fishy. What's going on here? All we want is somebody telling us the truth, but that seems to be harder and harder to get these days. Another one from Markets and Mayhem. There's been no sign that government spending is slowing. If anything, it's growing. And this is no sign of a let up in government spending, as 2025 is higher than the previous years, 24 and 23. That's also a function of our liquidity that's needed in the system. I think they have to do it to some degree. So Giovanni says Diamondback Energy trimmed its own full year production forecast Monday and said in a letter Monday to investors that it expects onshore oil rigs across the entire U.S. industry to drop by almost 10% by the end of the second quarter and fall further in the months ahead. So, yeah, this drill baby drill thing, this doesn't look like it's drill baby drill. This looks like we are doing release baby release of drill rigs. So, I don't know. I don't know why it's so difficult to understand that break evens in oil are higher than where the price is today. And it's having an impact on the oil industry in America. And I'm sure it'll have an impact on perhaps the employment in this sector. Here's another one from Alex. It says the Permian was plateauing since 2023 and will continue plateauing, slowly declining as we shake and bake. Steady $80 oil could mitigate this issue with response time roughly 6 months post-budget season, which means we will continue plateauing, slowly decaying. Drill baby drill is crap, and as was communicated before. And here is the Permian region basically slowing down. Time for both stocks and bonds to sell off, correlated to negative real economic environment. Think stagflation. Fed will be forced to step in before this thing is over. What's the Fed going to do? Um, they're stuck between a rock and a hard place here because their mandate is employment and inflation. Stagflation is when those two diverge. You get high inflation with unemployment. And I mean, what's the Fed going to do? Buy bonds and create more inflation? Like what is their action here? Lower interest rates and let inflation run? Regardless of the quality of the business, no business should be purchased above its intrinsic value. Buying a business above intrinsic value is not investing, it's gambling. The most ridiculous energy bull market ever. We've got Paul Sankey here. He said 250 WTIC predictions from quarter two 2022 are long gone. Now they're talking about $40 crude after prices have dropped nearly 60% over the last 3 years. In 2022, Sankey talked about the coming U.S. oil crisis. Today, he's calling for $40 crude. And at the top, when everyone was bullish, Paul Sankey says we're on the verge of a historic U.S. oil crisis. Then, today, a few years later, oil prices will drop to a $40 range following OPEC Plus decision, predicts oil analyst Paul Sankey. So what changed? I've been a bull since 2020 onward. I've been a bear between 2008 and 2020 on most commodities. So what's the change here? There's no U.S. oil crisis coming. That's not what a lot of the insiders are saying. So a lot of the news just follows whatever the sentiment is. Be careful who you listen to. I've been a bull the entire time. You guys have known that. And some people say, oh, you're wrong because oil price has been going down for the past 3 years. I think we're in a commodity super cycle. The super cycle has pullbacks, and we're in wave 2 pullback of the super cycle. Here's Dan talking about more about oil here. Says, FYI, I agree that part of the FANG CEO, that's Diamondback, letter is to message to Trump that WTI below 65 is too low for capital to see Permian growth. However, if that was the purpose, FANG CEO blew it by including today geological headwinds outweigh the tailwinds provided by improvements in technology and operational efficiency. That sentence tells capital markets that the Permian drilling results efficiency have peaked, and now the high decline rate challenge sets in. And that will start some capital moving away from Permian for other oil basins with less technical risk maturity. A mature Permian is good for oil, net gas, LNG going forward, and will actually get more investors to see mid, long-term price upside. But investors on the margin will start to look at other basins to play the mid, long-term oil, nat gas, where there's a less of a decline rate challenge, i.e., Canadian oil sands, Montney, and no fracked conventional oil plays. Yeah, doesn't that sound interesting, huh? Huh, guys? All right. Coming down, is oil pricing in a global recession? Oil prices dropped 15% since the beginning of April to near the lowest in 4 years. Since January, oil prices have dropped by 27%. Oil prices have stabilized over the last 2 days, but this is a key indicator to watch. And we're getting some support here, could be a potential bottom. But yes, we have definitely crashed after the tariff information was released. And maybe this tariff stuff does end in a slowdown recession. Possible. Warren Buffett says, what the wise man does in the beginning, the fool does in the end. So the wise man is buying cheap equities, and the fool buys it at the end, chasing returns. That's what I think he means by this. Here's another one from Diamondback Energy. It is likely that U.S. onshore oil production has peaked and will begin to decline this quarter. There we go. Paul Tudor Jones, tariffs are the largest tax hike since the 1960s. So you can probably take 2 to 3% off growth, and you will probably hit new lows, says Paul Tudor Jones. And he thinks that's largely directionally correct. Rock bottom entries. Today is what a raging commodity bull market feels like. We haven't even begun the real move. You'll get tired of winning as this plays out for months and months on end. We've got a bullish falling wedge that's been breaking to the upside. And yes, we're in a raging bull market that's going to come up, and he thinks that this is a potential bottom of it. And I agree. I think we're real close to the bottom, and we'll eventually start moving on up and working up pretty well in a commodity bull market that's starting wave 3. Permian Basin production of 6 million barrels per day with an annual base decline rate of 2.5 million barrels per day. Doesn't take much CapEx coming out to see that fall, says Diamondback first quarter 2025 conference call. Earnings call. Here's one from HFI Research. The seeds are sown, an inevitable oil bull market is coming. So here it is. The inevitable is coming. No more real supply growth. No more real supply growth for oil. Another one from Rock Bottom Entries. We're embarking on the most powerful commodity junior bull run we'll see in our lifetimes. Not a hyperbole. The next few years are your chances to cash in big on this shoulder, head, shoulder. It's ready to break out. You guys are in some of these stocks already on the website. So now we just have to wait, be patient for this big move to basically mature and materialize. It's all coming. The EIA is currently overstating U.S. crude oil production, but how much? 500,000 barrels a day is what we are overstating in U.S. oil production. Maybe Saudi Arabia can come online with some barrels to offset our declines in U.S. oil production and hold the prices where they're at today. I don't know. But this doesn't look all that great for production. Diamondback Energy, another one, the largest independent oil producer in the Permian Basin, says production has likely peaked in America's prolific shale fields and will decline in the months ahead after crude prices plummeted. There we go. Josh Young, global oil inventories are near their 5-year lows. There it is. This is the money shot, in my opinion, for inventories. We usually see inventories and oil price strongly correlated. Right now, we're seeing a large disconnect between oil inventories and the price of oil. In fact, we are about $40 below the fair value price of where our U.S. commercial inventory levels are at, given the price of oil today. That is a ridiculously large disconnect, and I don't know. I haven't seen a disconnect this big over the past 4 or 5 years that I've been following this closely. So that's kind of where we're at, and it's pretty crazy that we're this low with the price of where we're at. Here's some from Grady. He says, "Have you seen gold today? The global capital rotation into precious metals is not starting now. It started when these ratio charts below turned, which I posted on a real time back then for each chart. The huge inflow into precious metals could put a floor under gold, and this is GDX versus NDX breakout. We've got GDX versus the S&P breakout, gold versus the S&P breakout, and the Huey versus the semiconductor breakout. Now, if you've already taken positions in these like we have on the website, we just need to sit and wait for this to all materialize into, hopefully, very big gains. We do have a few that are up a couple 100% off their bottom in the gold and silver mining space. And hopefully you guys are participating in that on the website, and you can just have to hold on and let these things really run. Diamondback on U.S. shale, and I'm sharing a lot of Diamondback stuff. We are at a tipping point for U.S. oil production at current commodity prices. Today, geologic headwinds outweigh the tailwinds provided by improvements in technology and operational efficiency. Basically, the decline rates are overcoming the technology and operational efficiency gains that we're seeing. We could start to see this decline. This is Global Market Investor. The U.S. job market is deteriorating. Long-term unemployment hit 1.67 million in April, the highest in 3 years. The share of individuals unemployed for more than 27 weeks of total unemployment hit about 23.5%, the highest in 3 years. This has never occurred outside of recession. So maybe we're in a recession. Maybe the slowdown is occurring now. So the question then becomes, because markets are forward-looking, when will we exit this recession? Is there more to go? A lot of people are speculating that there's more to go in a potential slowdown, and that we will hit one of these kind of lift-off in unemployment phases where we see the market kind of crash out a little bit. So we'll see. Another one from Diamondback Energy. It announces it's reducing its active rig count by 3. Just an FYI. And that's all I've got for there today, guys. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We've got that special coupon code, and we also have the Platinum Midweek Update that's been uploaded to the website that you can view. That's all I've got, guys. We'll catch you next time. This is Finding Value.